Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about one very important trend, and this is in relation to US equity indices. So we have seen the markets being really strong, especially over the last couple of years. And by markets, in this case, I'm talking about the S&P 500 index, the Dow Jones, as well as the Nasdaq indices. So the bullish momentum started off very well at the first quarter of the year. However, last month, we saw the indices making a correction, with the SP500 going down about 6% and then beginning to recover this month. So we'll be talking about that, trying to understand the key trends, what has changed, what has not changed, and once we cover that, hopefully everyone will trade from an informed perspective. So once you join in, can just say hi on the live comment section, and these will confirm that everything is working just fine. Also remember that these sessions are not investment advice. They're not a recommendation to trade, so you should always do your own due diligence. So hello, Jason, and thank you for joining. So let's begin with the key highlight for the day. And this is a very important highlight. It's an article on Yahoo Finance. So companies are having their best earnings season in nearly 2 years. And this is the big news that out of investors are trying to process today. So as you can see, the top US indices, beginning with the S&P 500, it's 1.03% up today. So if you look at the Nasdaq, 1.03, the Dow Jones, 0.46, and the triple Q index is up 1.1%. So stocks have remained largely resilient in recent weeks, despite reports of sticky inflation and the risk that the Federal Reserve holds interest rates higher for longer than investors expect. So Wall Street strategists believe that that's likely due to a better than expected set of first quarter earnings. So to bring this conversation home, we have seen it happen. We have seen investors speculating that there would be about 7 rate cuts this year. However, following Fed by Fed meetings, we have seen that number reduced to an expectation of just 1 rate cut this year. So this has happened mainly as a result of US inflation remaining significantly high. So as per the last reading, the US overall inflation was up to 3.5%, and this is further away from the Fed's target of 2%. So in the last FOMC meeting, the Fed chose to hold interest rates at the current level, which is a range between 5.25% and 5.50%. So holding interest rates higher for longer basically is not good for stocks. However, the stocks have been performing differently. So even if interest rates are high and there are expectations that they may remain higher for longer, we have seen stocks remain resilient and continue making new highs. So among the key highlights is NVIDIA, which is up more than 90% since the year started. So with 80% of the companies in the S&P 500 are reporting, the benchmark index is pacing for 5% growth in the first quarter earnings per share as per data from FactSet. So this is the strongest year-over-year increase since the second quarter of 2022 and higher than the 3.2% growth analysts had expected prior to the start of the season. So when you talk about the earnings season, this is the period when a majority of the companies in the S&P 500 report their earnings. So the earnings for these companies between the month of January and March, that is the first quarter of this year, we saw some of them making record gains, including Amazon, Google, Meta, and so on. So the overall expectation was that yes, the companies would still do well, but the results we got were far much better than expected, and this is what is driving growth in these US equity indices. So higher interest rates usually hurt US stock valuations. We all know that during the COVID period when interest rates were cut to near zero at 0.1%, we saw a majority of these stocks doing really well, performing better than expected as a result of the easy money. However, this time is different. We are seeing a period of high inflation, high interest rates, and at the same time, stocks are still performing well. So from the consensus estimates, you can see how earnings have been changing quarter by quarter. So in the last quarter, the earnings were up 4.2%, and for the full year, they were up about 1%, but the stocks really performed well. Then for the first quarter of this year, remember we haven't gotten all the earnings, but indications are showing that we could be getting as high as 5% increase in earnings, and this is expected to be reflected in the stock valuations. So if you look at the S&P 500 stock, it's up about 9% year over year. Sorry, since the year started, that should be year to date. The Nasdaq is up 9%, and the Dow Jones is up about 3%. So this is not bad, especially considering it's the performance of only the first quarter and a few days extra. So the average earnings for SP500 usually range between 11 to 15% year over year. So having seen a performance of 9% in the first quarter of the year is a good signal that we could be seeing some further upside happening in the year. So bullish strategists on Wall Street have been arguing that strong earnings growth has driven the index roughly 8% rally so far this year, plus 1% today makes it 9%. And this could possibly send stocks even higher. So at a high level, this earnings period provides further support to our ongoing bullish view towards SP500 fundamentals, even as we navigate the Fed and underlying economic conditions. So now, as we head into the New York Open, which will be about 19 minutes from now at exactly 4:30 p.m., we're expecting to see some further bullish momentum, especially as after we saw Disney earnings this afternoon come in better than expected. So there's a strong positive optimism in the US equities. So having said that, I think now we can jump through and then try to understand what's happening with the charts, what's the technical analysis for the same, and how we can approach the markets knowing what we know. So from what we are looking at here, we're looking at the chart of the dollar index. So once we cover the dollar index, then we'll be covering other assets for the day. So just a moment, trying to divide my screen here. All right. So from what we are seeing here, starting with the dollar index, it was relatively weak last week, especially after the FOMC press conference. So this was the price action during the FOMC press conference. Remember, the news had already been priced in. Investors were expecting that rates would be held higher for longer, and with inflation moving higher, then the Fed was expected to mention that it may continue holding rates higher for longer. So this led to a sell-off after the big bets that were betting on interest rates remaining higher for longer. But now we have seen the dollar starting to find some good support, especially after the Friday bottom and then Monday attempting to go up. Today being Tuesday, we are seeing the market consistently pushing for higher highs. And this could be the theme of the week as the dollar looks to recover against other currencies. However, the key major trend or the highlight is what happened with US equities. So having been on a bearish momentum for 3 consecutive weeks, and 3 consecutive weeks, I'm talking about this period here, we have seen these stocks respond quite positively. So the Dow Jones managed to find a new bottom here, and it was what I would describe as a stock market correction. So the Dow Jones was down about 6.85%. So since finding this bottom, you will notice that we have had some considerable growth. So the recovery from this bottom here, within a period of about, so last week started quite positively, pulling back, but still closing on a positive. Then this week, this was the previous week. So last week, there was a big drop followed by a big rally, which meant that we closed on a high. And then this week started slowly. So if you look at the price action on Monday, nothing much was happening, though there were some slight gains. And then today we had some sideways momentum for a while. If you look at the 15-minute chart, this was not much of a momentum. So a lot of momentum came in during the London Open. Our market pulled back for the rest of the day. And now we are heading for the New York Open, and it seems likely that the market will be headed higher. So from the forward chart, this is how it looks like. So after the over 6% correction in the Dow Jones, now we are seeing a very strong rebound, and we could be seeing some further upside. So remember, this was an all-time high in the Dow Jones. So the current price level is just slightly below the all-time high. So it only has to go up by about 2.75% before it hits a new all-time high. So in this case, if you look at the left and try to understand the previous price action, then it makes more sense to understand that there were key levels that was previously acting as a resistance, and they could be important when you're trading the Dow Jones and finding short-term targets. So having seen the market finding out of resistance around this area here, there is a good possibility that this week the price extends to this area, and this is a price level of about $39,220 per share. Then we have the Nasdaq, which is tech dominated, meaning that a majority of the stocks in the Nasdaq are in the technology sector, and it tends to be more volatile than the other industries. So from the daily time frame, you can notice that we have had 4 consecutive days of bullish momentum. So from this one day here, then the second, third, and fourth, and today we are looking at a potential 5th day where the Nasdaq is strongly moving upwards. So having seen the price action over the last 2 weeks, the Nasdaq has been following this bullish channel, basically swinging up and down in the channel, and now we are trading closer to the upper trend line. So the big question is, will the Nasdaq find resistance here and start pulling back downwards towards the lower trend line, or will it cruise higher and continue with this recovery journey? So remember, we had a trend line here after hitting a new all-time high. So the trend line literally started from a price level of around 18,465. And from the current price action level, we are basically looking at 2.07% rally before we see a new all-time high. So having seen the earnings coming in better than expected, there is a good chance that the Nasdaq will continue even higher. So from the 15-minute chart, since the market opened today, we haven't had much of a price action. So in this case, the area to watch would be the current price level to see if there's a breakout happening. So if the market happens to break above this consolidation, then it would be a signal that we are headed higher, and a long position would suffice, making sure you take advantage of further bullish extension in the Nasdaq. So the potential target for some further bullish momentum will be looking on the left and to see the previous price action levels. So we already managed to hit this area here. So in this case, the previous highs that we have seen are either in this area or in this other area here. So I'll be describing what I mean. So if you know this area, it was acting as a key level support before it was broken and the market went down. So after the market came back, it found resistance here. So that may explain why we are seeing the market playing around this area. Then, if you notice this area here, it was acting as support. Then later on, it started acting as resistance. And now in the final push, it acted as resistance before the market made a run towards the lower side. So the big drop is now being retested. So in this case, for intraday trading, it makes more sense to think of this area as a nice target. And this is $18,177 per share. So we happen to have a bullish momentum that is pretty strong. Then there is a good chance that the market could also breach that area and head higher. So also a potential target of 18,341. And now that is based on what happens during this range that we are observing here and a potential break during the New York Open. So as for the SP 500, this is what we are seeing. A similar thing with the Nasdaq, a bullish channel here. Our market oscillating between the two trend lines. And that led to a very strong rally that ran for 3 consecutive days. And now today, having broken that resistance, notice that we had a clean break here. So this green candlestick here was a clean break. And now after the market broke that area, you can see it was just trading sideways. So we didn't have much of a momentum earlier. The momentum is just coming in as we head into the New York session, and it's more likely that the market is breaking this area here. So notice the sideways momentum on the 15-minute chart, and now that the market is breaking up towards the upper side, it seems more likely that the S&P 500 will be headed higher as it continues with this recovery journey. So the immediate target is not very far off. It's just around this area here, which was acting as the resistance previously. So now we are looking at a potential rally and extension of this rally to a price level of $5,222 per share for the S&P 500 stocks. So that's it on US equities, and European equities are also strong. So for the UK 100 or the FTSE 100, we saw the market breaking this area here, which was an all-time high. So we have been seeing new all-time highs being formed since last week. So the market, since last month. So from the weekly chart, you can see this happened 2 weeks ago. Last week, there was an attempt at pullback before the market accelerated higher. And this week, you can see how the market opened, made a rally, and today opened with a big gap upside, pulled back downwards, and now in the current hour, we have just formed a new all-time high. So whenever you see a very strong market such as this one, it doesn't make sense to be trading against it. So whenever you see a pullback, then it often implies an opportunity to continue riding the wave or continue riding the trend. So in this case, I expect to see some further upside potential happening in the UK 100 stock market index. So for European equities, it's a similar thing. I remember we covered this earlier in the week. So we are seeing this clean break happening, and now the market is pushing higher. However, the target is not on this high, it's on the most recent $9 per share. So it seems more likely that you'll see this upside continuing, especially considering the correlation between European and US equities, which have all been pretty strong for the better part of the year. So the French 40 index is also making a comeback here. So after we got to this target here, there was a clean break, but the market is headed higher. So in this case, is now a target again. So we could be seeing a very clean run up to 81.26. So as for Asian equity indices, we have seen some of the strongest performance happening here. So after this yearly trend line that started all the way back around January 2023, the trend line was holding pretty well before it was broken later last month. So this month, we have seen some very strong bullish momentum. And now from the forward chart, you can see we have had several pullbacks followed by a continuation, pullback, and now we could be seeing yet another continuation happening for the Hang Seng 50 index. So I'll be on the lookout for this one, looking for potential signs of bullish momentum to continue trading at a trajectory of bullish momentum. So for the China A50, it's a similar thing. We broke the yearly trend line, and then after breaking the yearly trend line, there was an acceleration of price. So price accelerated, there was a pullback, and then a continuation. And then here, what we are basically observing is the market holding sideways for a while before making the next move. So for now, I wouldn't be overly aggressive on this one. I will be observing to see what happens in this consolidation. So on the 50-minute chart, we have a pretty nice consolidation, which you can easily monitor to see whether there will be a breakout and then trade in the direction of breakout. So as for other assets, if you look at Bitcoin, it made quite an impressive recovery 2 weeks ago. Then this week, we attempted to go higher, failed, pulled back downwards. Then today is still a sideways momentum, so we don't have much of a price action that we can be proud of and say this is the strong momentum direction. So what we are seeing here is more of a consolidation, especially after the Hong Kong indices failed to deliver the expected volume. So majority of the price action from Saturday, Sunday, Sunday, Monday, Tuesday, Saturday, Sunday, Monday, Tuesday, it's just sideways momentum. The best attempt at a breakout was yesterday, which failed. So we could be seeing Bitcoin with it this range up until there is a breakout. Of course, in this 2277, and then a strong bounce for yesterday, and then for the better part of the today, gold has just been moving downwards. But then in the most recent correction for the last 1 hour is strong bullish momentum. So we could be seeing gold continuing with this momentum for the better part of the session. So it seems more likely that buyers are entering this market and we could be seeing some further upside potential. So earlier in the day, there were some good setups happening in Euro USD. So you can see after finding the resistance here, the market dropped. But now we are seeing this all happening as we approach the new session. So the dollar index might remain weak for the better part of the day. And of course, for Euro USD, we speculated this yesterday that the market would retest this area and move lower. But then from the price action this afternoon, the idea is being nullified. From what we are seeing here, it seems like the dollar index might remain weaker for a longer period of time. And lastly, for USD JPY, as I mentioned, we are seeing the dollar being pretty weak against the yen. So there has been an attempt to move prices low, but then prices pulled back up. So there seems to be a very strong wall of resistance around this area here. So we could be seeing the market potentially make a move downwards as the Bank of Japan struggles to strengthen the yen against the dollar. So in this case, this move up with a strong resistance. So I'll be observing this area here to see whether there's a potential break, which would be a signal that the market is headed lower. So any move that breaches this area would potentially be a signal that the market is going for some further bearish momentum. So that's it for the day. Thank you very much, guys. Thank you for your time. I'm checking the comment section to see if there's any questions. So hello, Ikeja, Clement. Hello, Francis. Hello, J Squad and Waridi, the channel, and it may also be on the next session.